So looking back on 2023, we're coming up into December now, into Christmas, and it's a good time to take stock of what we've seen throughout the year. I think the main point to talk about that we've seen as managers in the market has been the exceptionalism of 7 stocks, the Magnificent Seven, those mega cap tech stocks that have done so incredibly well this year compared to last year, that they've led the majority of the US market, they've led the majority of the global market. They've certainly had a lot of managers wondering if they own enough of those stocks. Another cohort of managers arguing that those stocks are too expensive. What we've seen is a lot of portfolios underperforming those markets purely because they don't own enough of those 7 stocks. So a lot of our clients are talking to us, a lot of our clients in the market are asking, well, why have these portfolios perhaps lagged the market this year? And it's predominantly been from that factor, the exceptionalism of such a small clutch of stocks, when if you think that there's 1,500 stocks in the global market to choose from, that only 7 have really been the drivers. It's been a very narrow market. It's been very difficult to adapt to. What we try to tell clients, what we try to maintain, is that out of those 1,500 opportunities, there are the winners of tomorrow. There are some fantastic companies out there that are not within those 7 stocks. And what we're trying to do, and what we've tried to do this year, and what we'll try to do next year and the year after that, is to find those opportunities, is to find those fantastic companies. Europe has been a great place this year to be invested. Contrary to some of the macro challenges that you've had around Ukraine and the economic slowdown, you've seen that as quite a good place to be invested. And we see that carrying on into next year. Many people will know likewise that Japan has been a very good place to be invested. So we've been investing into that throughout this year, and it's been very, very good to see that market after such a long time picking back up. We think that that will continue into 2024. There's a lot of investors, including TAM, that are worried about a global slowdown next year, that are worried about what happens to the positivity that we've seen through November and December. It's been fantastic to see so much coming through at the end of the year. And does that get threatened next year as the global economy perhaps starts to slow a little bit more than people are envisaging? We remain quite positive about that fact. We think central banks are ready with high interest rates to come in and start cutting those rates to help stimulate the economy. We think that that's going to provide a healthy level of support to stock markets and to bond markets throughout 2024. So we remain positive. We're not immune to the potential for volatility to return, but we're prepared for it. I think that's the main observation that I could make about markets as we move into 2024, and how we're prepared and how our clients are prepared, is to make sure that we're evaluating every opportunity. One of the other points about 2023 has been the bond market. The bond market was slated to be one of the best performing markets in 2023, and it simply hasn't happened. On the whole, when you look at government bonds, they've been weak this year. A lot of people predicted that we were going to enter a recession this year, and therefore the sovereign market, the bond market, was a great place to be invested. Simply hasn't happened. Conversely, you've had areas like high yield, which have been fantastic places to be invested. So on a headline level, it looks like the bond market has been weak this year, and predominantly it has. But that doesn't mean that there aren't areas of value, areas of opportunity. TAM's been certainly invested into those areas. We've had some great investments in the bond market over 2023, which have done really well. We are enthusiastic about those investments as we go into 2024. As you start to see central banks changing the narrative and talking more about interest rates coming down than interest rates going up, and managing that inflation battle, you should start to see an environment where bonds perform more positively. We like high-rated company bonds, corporate bonds. We think they're very attractive, very attractively priced as we move into 2024. So we're evaluating those areas as well. Some of the high-yield market has done extremely well this year, but we remain concerned that as rates stay higher than they have been in 2024 compared to the last decade, that those companies, those high yield companies, might come under pressure a little bit. So we're trying to make sure that we're staying away from those areas and focusing on the high quality parts of the market. But predominantly speaking, we're seeing a lot of positivity across the board. We're seeing a lot of positivity coming from emerging markets, coming from US equities, coming from UK equities, which are extremely cheap at the moment. So we're very positive as we move into 2024, especially on our ability to manage those opportunities and find the best ones for our clients.